All right, everybody, can you hear me and see my screen? We're in YouTube. I think we're good to go. All right, everybody, yeah. Okay. All right, well, yeah, good afternoon. Welcome to the Bookmap Academy meetup. And this is our coaching and mentoring session where we'll go through your trades, any of the members in the Academy here, give feedback, and make you a better trader. That's what our goal is in here. So you will be actively creating your own journaling and going through your trades and marking up the charts. We'll give some feedback, and it's a pathway also to get Bookmap for free, and you can get also other add-ons for free as well, and quite a few other little bits and pieces along the way, as well as a great networking with a lot of different traders. Anyway, and we'll have a Q&A as well. Got to go through the disclosures and then we'll jump in here. General disclosure, all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. All right, so I got a few things, housekeeping things I got to go through before we jump into the coaching here. So the first thing, we just get back to the slides here. The first thing is we want to pair your Discord handle or name with your email and your license key within Bookmap. This will make a tighter community. This is our goal, so that we keep the riffraff out. Basically, those that are using Bookmap, they will be asking more pertinent questions than other people who just come in and maybe we know that they're not really using Bookmap as a client. Now they can even have the free version. That's fine. Doesn't matter. We just want to know who you are, and there's a few other things you'll get: exclusive webinars, enhanced Discord services, access to beta programs, free add-ons, other freebies. So just take your phone out and you can use the QR scanner right here, and then sign up. So put in all you have to do is three steps here. Let me show you the form here, and we'll put this into the chat for you as well. Go. All right, the form here, very, very simple. So put in your email that you use. Now this is your Bookmap subscription email. All right, not just some other email, the one that you use for your Bookmap subscription, and then provide your Discord username here. Okay, not as Dan had showed here. You cross out the one in bold and use the smaller one underneath it, and then your license key that you can find here, and you can copy it right here, and then just place it underneath and submit it. That's it. All right. So anyway. Yeah, please do that, and we'll have a much kind of tighter community in here, and that's our goal. All right. So now, before we jump into some of the slides, and we're going to let Slowdown go first and go through some of his the coaching that he's done and the feedback for specific traders. I just wanted to go through this. This is actually something Slowdown made for us a while back when he presented, and it's about his progression, and we just basically adopted this, and I wanted to share it with you guys to show you the steps in here, because as you know, as you signed up for the Bookmap Academy here under the More button and Academy, there are steps and stages in here. You first apply for the Bookmap Junior Academy. And then if you're invited to the Bookmap Junior Academy, it's your content is good. Now you have to meet the quantitative and qualitative thresholds. If you do, you will be invited to the Bookmap Academy, and you will get Bookmap for free. Now there's already been a few just recently, and DNT Matter as well. We're going to bump him up. We talked with the different coaches, and congratulations. You know, you're in the Bookmap Academy. You'll continue on doing your documentation. You'll hone your strategies, and you get Bookmap for free. If you double your quota, you get the MBO bundle for free. Okay, so the ball's in your court. And then if you continue on, the next step is to become a coach. We'll give you data for free. Right. The last step in here is a Bookmap streamer, and you can stream on our Discord channel. You get everything else for free, as well as other incentives. All right, so we've got this really nice program here for you if you want to sign up, and you'll have to provide your username and in Discord as well. All right, FAQs are down below. It's completely free. You just need Bookmap. You can even use the Bookmap free version that's available for crypto. Okay. All right. So let's see. I went over that. Went over this. The stages in here. Let's just go through these quickly. As you can see, like this was Slowdown's process, and in May 2023, he's marking up his charts in here. And he's marking up a lot of stuff. It's you know, there's a lot of things that he's identifying here. This is step one, right, or stage one, and this would be your akin to your Bookmap Junior Academy applicant. Identifying order flow elements, the trader begins to understand the contextual importance of these elements and how the markets work. This is a really crucial first step. The next step is refinement of that. Now you're invited to the Bookmap Junior Academy. You've made it through, and now you're focusing on the important elements for you that resonate with you, so that you can start to see and understand how you are going to use these to your advantage to build an edge. A lot of you guys are already here in this step already. You can see it in the content. The third and final step, when you get invited to Bookmap Academy and get Bookmap for free, you are looking at your specific events or elements within your trading plan. And you can see in here, like Slowdown has, look at the editing in here, from a lot of elements to a lot less elements to just a few. He even has an image up here that we all know very well in the Discord chat room. In his Wyckoff Spring. He knows exactly what he's looking for. He knows his entry, he knows his exits, everything. This is the goal, right? And continue on and get better and better. All right, so with that said, let's move on and move over to Slowdown's presentation, and we'll let him take it away here.
Okay, thank you very much, Bruce. Good afternoon, everybody. I'm going to quickly go over 3 traders today. We're going to start with Stephen. So Bruce, if you want to go ahead and enlarge the first image there, we can start working our way through. So what we've got here, it's the same image I've duplicated to leave Stephen's original image on top, and then I kind of scribbled all over the bottom one below. But basically, you know, Stephen, like overall, like good annotations and observations. Like we can all tell you're making an effort to be really thorough. I had a couple thoughts regarding the flag pattern slide that you shared yesterday, and a few things to consider going forward with. Okay, so if we start around number 1, I'm going to assume that the blue rectangle you've drawn on the chart kind of highlights the same area where you've drawn the blue rectangle on the schematic. I think that's, you know, fairly understandable. So based on that, you're looking at kind of, you know, the larger flag move taking up the majority of your screenshot here. But I would kind of start walking myself through the checklist for a flag pattern. And if we do that, you'll see, you know, like we have a consolidation range. I drew a little yellow rectangle around it to kind of highlight the consolidation. So we got that. That's kind of step 1. Step 2 in the checklist is a steep impulse with strong relative volume. Now, I don't really see a real direct impulse on high relative volume above the consolidation range in this example. Instead, we see buyers, but we also see a little battle between sellers and kind of another consolidation period, mind you, a shorter one before we get another little surge from buyers. So we don't really have the making of a real impulse breakout. Um, and another thing to consider when you're measuring your impulse and your breakout is, are you measuring from the top of the consolidation range or from the bottom, where sometimes we see buyers kind of come in? Now, there's no, Bruce could correct me here, I don't think there's a right or wrong answer. I've been tracking this setup for a couple months now, and I started measuring from the top of the consolidation range as being the breakout, and I found the measured move to be pretty reliable when gauging it that way. Just something to consider when you're going forward. Up to you where you decide you want to start measuring that impulse from. But if we continue on, number 3 is the pullback. So in this example, the pullback's pretty deep. And if we take the measurements from where you drew the initial impulse, bottom to top, we go from around 14.5 to 19.5 on the price ladder, so around 5 points. And the pullback takes us from 19.5 back down to 15.5, approximately 4 points, or 80% of the entire move. So we really don't want to see the pullback retrace more than 50% of the move, according to the checklist. At least the checklist shared in the Bookmap Learning Center. I mean, you can feel free to adapt it and make it your own. We also don't see a lot of support on the bid. So we're getting, kind of a fairly large pullback. It's fairly steep, and we don't have a lot of bid support. And so that would kind of invalidate the rest of the checklist for me going forward, because at this point we're still looking for an entry opportunity. But based on what we've already seen, like kind of a lackluster breakout and an aggressive pullback with no support from the bid, I'd be kind of cautious in terms of like looking at this as a flag at that point. This gets a little more confirmation when we look at the relative volume. So I put a little number 4 down where the volume delta bars are. And just as a way to say, like, the schematic you've added to your chart is awesome, but it's covering up an easy way to judge relative delta. I mean, we can see it in the bubbles, but sometimes I find looking at those bars at the bottom just kind of outlines it so clearly. And again, we want to see high relative volume on the impulse, low relative volume on the pullback. So it would just be nice to see like those volume bars, to be perfectly honest. I find them really, really useful when gauging a move. And then, like, I guess lastly, like I'd say I included my version of the flag pattern checklist that I made when I watched the it's number 5 on that same image, Bruce.
I'm sorry,
So
on this one?
no, if we can go back to
Okay.
that last image you were just on.
So I'm sorry,
I added in.
slow down. I'm having a quite an issue here with, I don't know why this tool is the pen tool is not working for me on this, but anyway, I'll have to bear with it, I guess.
Yeah, well, I was just going to add, that's okay, Bruce, no problem. I was just going to add that I put my little version of the checklist on here. And I just made this after watching the Learning Center video, and it's probably similar to the one that Bruce uses. But if I start looking at this, I look and I see trapped traders, consolidation. Yeah, we went over that. I don't see the steep impulse and strong relative volume. We do see the move into liquidity where we get our little pullback, but our pullback isn't minor, so I wouldn't check that off the list. And by the time we get our buy volume above sellers, number 5, I've kind of already voided this as a setup for me. So basically, I kind of check off 4 out of the 7 elements. We ultimately did make it to the target, but I didn't really see this developing as like a clean and clear example of a flag. And if we can close this image and open the one right below it, which is a flag pattern that Bruce shared today that he was kind enough to let me scribble on. And I put the same schematic that you had shown there. So, and then I put a little checklist right next to it. And if we kind of just really quickly go over this, you'll see kind of how much more defined the actual flag is. So number 1, we can see our clear consolidation range. 2, we have a steep impulse and strong relative volume. goes into liquidity, number 3. Now the pullback initially looks to be high volume, but the liquidity really supports the bid. The volume kind of dries up, and eventually it turns into what we'd consider a low volume pullback before we see number 5, buyers above the seller, strong relative volume for a second impulse up into a measured move. And Bruce just shared this chart, I don't know, a couple hours ago, and it really stood out. It's a higher time frame example. We're running, I don't know, 4 or 5 hours here. So like, you know, the market is fractal. You'll see this in large time frames, small time frames, but this was just kind of a clear example just from today's session of, you know, what the move can kind of look like, and how when you apply the checklist, it can start to get a little clearer. And that's kind of my feedback about the flag pattern. I hope it makes some sense. I hope I didn't go through it too quickly.
No, that was brilliant. I mean, just great. I really like. I mean, if this is what's so great, I think the way you did that slowdown is you have something that very clearly shows it here, and then contrast that to this here. All the points that you went through, certainly, but you know, because it's kind of jumbled up. I totally agree with your feedback on this here, and then here it is, really clean and clear, and a big distinction. So, and keep. I think this was such a good learning tool, you know, that you use, is to put this on your chart or put this near you. This is what you're looking for, right? And then, do you see that in here in this one? And yeah, and you have your checklist as well. So it worked out, but there's a lot of points in here that I don't think if you grade it, you know, with the setups checklist tool in Bookmap, I don't think it would be above an 8, and you probably want to pass on it, basically.
Yeah, it would be a little messy for me. Like I said, even though it worked out, but you know, and Stephen, there's some additional feedback for you. You can read about another slide. I'll post a link for you in the chat to read about an additional setup you did. But for the purpose of this webinar, we'll just move on to Alan. And
well, do we want to open up the mic for Stephen?
Up to you guys.
Yeah, let's open it up.
Hello, can you hear me?
Yes.
Yeah, thank you for the feedback. It's something that I'll definitely have to go over. Yeah, all valid points, so I agree. I didn't even notice that I was covering the delta.
Yeah,
I don't have anything else to add, but there were other slides, and the reason why I brought this up was it's quite interesting that it was kind of hidden in there, but this is like zoomed in. A lot of the fractals. It's within the fractals.
Well, this is the one I chose because this is the one you had the schematic on, and the image above had kind of the clean green line, pullback green line. So this was the easiest one for me to talk about without kind of having multiple slides put together.
Yeah.
Part of my other feedback actually in the thing that you can read afterwards is when you are creating a larger picture using multiple slides,
yeah,
I think it would be really helpful to number them, either from like highest time frame to lowest or lowest time frame to highest, because I think your content's really good. And when I was going through it, it just took me a little longer than I'd be proud of to kind of put all the pieces of the slides together, to know like this is, I mean, obviously they have a time axis, and so you can start to kind of figure it out, and you do a really good job like highlighting that, you know, this is a zoomed in section of this, but when there's 5 or 6 slides, it can get I can get kind of lost in it just reviewing it as an outsider.
Right.
So like if you had a system where like look at, slide 1, 2, 3, 4, 5, and then you would know that, you were getting progressively closer or farther away from the image. I think it would make it a little easier for a stranger to get on the same page as you quickly, but it could also be a deficiency in my own, learning ability, which is pretty well documented as well.
Okay, no worries.
Thank you, Stephen.
No worries. Yeah, sorry about the other times that I couldn't make it. I had too much noise around. But
No
great
worries.
feedback. Thank you.
Excellent. Thank you.
All right, take care.
All right, we'll move on with Alan. And guys, I think in order to keep these shorter, when we open the mic, I think we're gonna run a clock so that we had a great session last time. It just went for an hour and a half, and it's just too long. I want to keep you guys coming back and respect your time. So anyway, let's jump in and yeah, take it away. Slow down.
Okay, so this one's from Alan. And just overall, my comment is that Alan's work is so consistent that sometimes I have a hard time telling if I'm looking at the same slide or if I'm onto a new slide. And I mean that with the highest of compliments. A lot of what Alan shares is basically a mean reversion trade, and they all kind of look the same. And again, that's a compliment. He's managed to kind of identify what he's looking for, and he describes it simply. And then, that's it. He doesn't clutter it up. And one thing I wanted to share with Alan, and I mean anybody else who's interested, is Alan takes this as a mean reversion trade, just like most of his other ones. He's kind of targeting VWAP and the point of control. He basically gets outside and he gets short if we're above it, or he gets long below it. What I also really like about this trade is it fits into, sometimes some of us talk about the Wyckoff theory and the Wyckoff structures in the chat rooms. And this is just a great example of how to identify where we might be starting that mean reversion. So what I've done is below I've attached just a quick schematic of a traditional Wyckoff structure, and it basically includes 4 parts to the market. And if you look in the top right corner of that structure, that's basically what's captured exactly in Alan's image, the distribution area. So we'll take a quick look at that, and then we'll zoom back up to the image from Alan. And you'll see we've had an impulse up. We had a buying climax on the top left. Then we start building a consolidation range. The consolidation is held by the kind of a little band of liquidity at the top. And when we pop that, we see icebergs that are selling, we see buy stops going off, and then immediately we see a reaction from the sellers. As soon as we get outside that consolidation range, more buyers, and we have basically a false breakout on low volume. If you look down at the delta at the bottom of the screen, you'll see we don't have a lot of buyers when we actually pop through that liquidity. We get the reaction from sellers then. So even though this is a mean reversion trade, to me, that's like the big clue of like where we might be going. And so rather than just playing this to the opposite side of the range, like I often do, Alan's looking at it a little more zoomed out, and he's realizing that, this is an opportunity to take it all the way back for a mean reversion trade. And I just thought like it's a great example of a trade that he shares all the time, and how it fits in with another structure that we've been talking about quite a bit in Bruce's chat room and webinars. And yeah, I don't really like have a lot of constructive feedback. I just saw this and thought, wow, that looks exactly like a trade I take. I'd enter it at a different spot and I might exit it at a different spot, but there's a million ways to slice it, and I just thought it was a nice slide overall, and fits into how I like to view the markets anyway. So for me, from a structure standpoint, this makes total sense.
Yeah, and yeah, I really like bringing in this understanding of something very objective and it's been around for like 100 years, and also applying that into what we're seeing in the order flow and just how these markets work. I mean, Wyckoff is well known for bringing that to us because he knew how the markets work. Let's open the mic for Alan, and we'll run it here and just give it a few minutes. And yeah,
What's up, bro? Do you hear me?
yes,
Yeah.
Okay. Can I mention one last thing, Alan,
Yeah,
before you
sure.
talk?
Go ahead.
My only suggestion is if you add a little circle or some type of like visual indication on your chart where your actual entry is and your exit, like just a tiny
I do.
little.
This one doesn't, but some of them I started putting it on.
Cool. Yeah.
If you look
Not
at
even an
the,
explanation, just like a visual indication will just make it easier to.
yeah, I
Again,
realize.
get up to
Yeah,
speed.
I started to do that. And maybe this one is like an older one, but I started to put, got in after, few green bubbles. They're willing to, give up some money just to have a more higher percentage chance of it going where it's to go. And then I usually, like I learned from Bruce, the front run. It's always better to front run the liquidity because so many times it'll just reverse on you, and that makes me lose sleep. And
yeah. Alan, are you trading from Bookmap? You are, right?
on Bookmap,
Yeah. I mean, you got your trade control panel open over here.
sometimes I do, but I use Jigsaw's. I use Jigsaw just to place the trades because their dome feeds to a journal. So I could just pull up all the trades in the day and it tells me all like the data. So I don't know. I'm sure eventually, you guys will have something similar.
Yeah, it's we have
Yeah.
something kind of in the works actually, but
That's the only reason.
okay. Yeah, I think I mean it would be better for us if instead of pointing to it, we actually see like the position where you got in or whatever it is, and then where you got out, and yeah, we can give you better feedback on it. That's for sure.
So like you just make right, just write on the chart where I get in and where I get out.
Yeah.
Yeah. I just wanted to say like to everyone, like you don't have to reinvent the wheel. Like the money's still green if you do a simple trade or you do a complex trade. The money's still green. So, I remember Bruce, I don't know, for all those million 10 a.m. Conference analysis, how you said that mean reversion traders coming with fury. And for some reason that always stuck in my head. So whenever I saw like the mark going down and I see the green line, the POC and VWAP, and I always label it because I don't know, I don't want to assume anyone knows that. I know what the green line is and the white line, but everyone has different colors and stuff. So I always try and put the label on that. But I remember you saying how mean reversion traders like are ruthless. Like it'll be a sharp move right to the like here it goes all the way to VWAP and that's it.
Yeah.
So,
Yeah, it's true. I mean, like you can see, like the market just keeps pushing, and then these like mean reversion guys come in, and they're just really aggressive.
yeah, and like you see the box two, that's consolidation, right? So usually when you have consolidation, it's in a breakout one way or the other in a big move because they're someone in the big is accumulating some contracts and eventually it'll break out to the downside or to the upside. So as soon as the red bubbles came, one, two, like by the third one, or the hour, the bigger one, that's where I got in, and
Right,
then
right in
yeah,
here, right?
yeah,
Yeah,
and
that's
then
great.
it was a tiny pullback with that little green dot, but it's a shallow pullback, so it didn't bother me, it didn't freak me out or anything.
Well, Alan,
It's
I'll
a,
also mention with regards to that pullback, it lines up
mm,
with the bottom of the consolidation range, and that's almost just like a great sign for me. Somebody who's used to trading these structures, like you want the pullback to hold the bottom of that range, and that's just additional confidence that we could be going lower. So like that's kind of almost an expected place to pull back to.
yeah, and you shouldn't trade within the box, like you have to,
Yeah.
right? You want it to see who the aggressors will be, and whoever But if you see on top though, you see I circled there was on top a executed nice cell 42, and then on top is 100. Just didn't fit on the screen. You see the 100 over 2. So I never, I don't. And there's another one, 73. So I put 2 arrows pointing to it on the top left, right where I wrote NQ mean reversion short. There's the 73. So I know icebergs aren't supposed to be used in a vacuum, but if I see so many like on the top of the range, I just keep an eye out, and I have the sounds for the market pulse. I have like the going down is uh, like it's a more annoying sound because it's going down, and going up I have like bubble sound. So when if I see that, I hear the sounds, it's the aggressors are coming out of the consolidation box. I waited until closer, to the bigger bubbles, and that was it. And look how exactly it goes right to view up. It's like it's amazing. I mean, I could put these all day. Like how many times it just gets to the POC and turns around, or just gets to the view up and turns around. Like it just happens all day long. Like for everyone listening, like you just get comfortable with that. Like really, you can. You don't have to like I know some people mark up their charts with all kinds of fancy terms and stuff like that. But I get messages from people saying that they just like what I put because it's explained simply, and they don't put any fancy words. My belief is that Wall Street is much of fancy. I worked in the banks. That I believe like Wall Street is just a bunch of simple stuff written in fancy terms, and when you finally realize that's all it was, like VPOC and all these terms you can use, it's all at the end basic.
Yeah, yeah. No, it's a good
Yeah.
point. And Alan, we just went over. I timed you at 5 minutes, so if you have any kind of closing comments, let's move on to the next one.
Just a closing comment is that I started to add timing sales on the right side because when an iceberg is because iceberg execute a 42, it's an iceberg. So you just see the 42, but there's more underneath it, right? There's more trade underneath it. So when the iceberg, if you can see the full execution of the iceberg in the timing sales, so like you get like the full amount. So like if you see in the timing sales, it's like a 73. It goes 10, 10, 15, 73. Yeah. Yeah. So then when I saw 73 or whatever, that stuck out to me that the iceberg was executed, that all those were icebergs being executed, and I could see more, see it on the chart and see the real numbers and time and sales. And that's all for
Yeah,
today.
yeah.
I can
Nice.
still go on, but only 5 minutes.
All right, all right. Thank you, Alan.
Thank you.
All right, let's.
Thank you. Thanks. Slow down. Thank you for helping.
You're very welcome.
BB Trader.
Yeah, this one will be a little quicker. So BB Trader submitted 4 images, so I just kind of cropped them all into one to make it a little easier to review. Basically, overall, I'm just looking for a little more clarity and explanation behind the trade thesis. I made a couple points of what I find to be interesting, but I'd kind of rather hear it from you in a little more detail rather than me just guessing. So, like what we can see you've labeled as entry after VWAP, absorption by passive sweeps at buyer level, and then you've included the bar charts for before and after down below. And that's all great. It gives us kind of a higher time frame perspective. Oh, and of course your target exit 20 pips. I would just kind of want to know like what kind of order flow elements are really are giving you the confidence to take this entry. So like the couple things that I see as being points of interest, where I've put the number 1 on the far left image. Once we transact the liquidity around 2684, we see liquidity added lower to support the bid. And then we see that sweep activity right back around the same level. So that's all of a sudden becoming a level of interest
Is this it here,
for
slow
me.
down? This one?
Yeah,
Okay.
yeah, that, and then to the left, you can see where kind of the liquidity transacted exactly. So right in the same location. So something's going on there. So I find that interesting, but I kind of want to know why you would find it interesting, or maybe some of the other Academy members would want to hear a bit more of your insight on that. We also see where I put number 2, the liquidity is following price higher on the bid. So like between between the liquidity moving higher and that sweep activity, like there's definitely something happening here. And it's like, I guess I'm wondering, is this the criteria for entry for you? Or like, what are you kind of doing, to decide to actually pull the trigger and enter once we get above VWAP? Or is it just simply we're above VWAP and now it's time for a long? Maybe just give us a little more detail as to how you make this actionable. Looking at the chart below, right where we are, Bruce, the before chart, you can see I've added the blue arrow, and it looks like we've just kind of picked stops at the previous swing, which is interesting to me. Like maybe that's, the area of interest that's got you kind of curious. But the fact that that's happening, our sweep activity and our liquidity is happening at that exact level, there could be something to it. I would just like to hear it more in your words than mine, really. And finally, why exit at 20 pips? I've looked through some of your other slides, and it seems that it's not like a standard set exit price for you. So maybe just a quick little piece of detail on why you might exit there. I drew the blue arrow as my best guess, like you're trading back into volume, kind of like we were just talking about with Alan. That's probably where the point of control is. So is it just a simple mean reversion trade, or is there something more to it? Again, either way, I just kind of like to hear it in your words, a little bit more detail rather than me just kind of guessing.
Yeah, I don't know if he's in here. So you can raise your hand. Oh, Stan's raised his hand. Stan, do you have a comment?
I don't see BB in here, so I think possibly just move on.
Invite Stan up. Okay. Anyway, all right. Let's see. I'm with you on this slowdown. I'm also like, it's getting interesting over here. What you had documented, and for the reasons that you mentioned with the liquidity and they're starting to build up and bid up underneath again, and the market's reacting to that to the buy side, and then trading back into VWAP up in here. It's you're kind of guessing here, like what exactly we can see these things. It would just be good for you to articulate these things so that we can better understand where you're coming from, and that's a big part of this documentation or journaling process, so that you can really understand what you're looking at, and you have to communicate it to others. That kind of keeps your feet to the fire and makes you more accountable. So let's see. Anything else, slow down?
No, that's kind of it. I think we covered it. We did flags with Steven, mean reversion and springs with Alan, and then just asked BB Trader for a little bit more explanation on what they're submitting, and that's kind of it for me this week.
Okay, excellent. Well, thank you so much, slow down. That was excellent. Guys, look at this feedback. I mean, you're getting top-notch feedback. I don't know. I hope you appreciate it. I certainly appreciate the coaching for sure. And what I love to see is when we see this in the community, like in the Discord, and the discussions back and forth. Really great. I mean, you guys are learning from each other. In fact, we can jump in here. And I think I'll even start. I've got a bunch of people in here, but I'm going to start with Crash F16. I'm afraid to open the mic with him, but I'm just kidding, Crash. But like, um, I wanted to start here because this segues right into this. Look what he had written in here. Like, oh, maybe it wasn't in here. Maybe it was in Discord. He says, you know, you guys keep coming back, and let me try to find it in Discord, or maybe someone can. But like, he had the text description, and it was like, you know, that his work, other people are learning from it. They're inspired by it. They have questions for Crash. He continues to go through his setup and get better and better at it. And you know, it's helping everybody. It's helping him, and then it's helping the community. And that makes it, you know, something special, basically. And that was really the big thing, because otherwise, like, you know, it's the same setup, like, you know, again and again. It's just a better example here. It's more refined. Look at these things that he's looking at in here. He's got his market pulse hitting his CVD, okay, and market pulse hitting several times here, right? CVD, and then he's looking at the buy volume in here, the delta volume. I mean, this is just hitting you over the head, you know. And this is a strong move to from the downside here, and you're looking at a reversal pattern in here, and on just a double bottom. You know, this is a strong pattern in here. It's really telling you something, and just looking for those buyers to come in and lift it at this point. So yeah, nice move. And then look at the flag pattern after that. Beauty. So here's your consolidation. Let me draw it up. Hold on. Just so you know, there's multiple things to take a look at here. You know, here's your consolidation. Here is your impulse move here on strong volume. Here's your low volume pullback, right? Look at the volume in here. And then here's your impulse move again, right? Start targeting your high liquidity. You're good to go, right? And you know, another thing, this is something that I love seeing in Crash's work, is the trade management. So he's getting in a few contracts, and he's, you know, he's going with micros just to kind of reduce some risk, and then he's adding in, legging in here on the breakout at a great area here. Is starting to break this small consolidation in here, and you know, I don't know if you're legging out in some of these areas, you're holding and looking for back to VWAP up here, or I know, Crash, you're even looking at ATR for the day on some of the bigger swings. So great stuff. And yeah, well, let's open the mic, but we got to put a timer on. Sorry about that.
Bruce, you're killing me.
Sorry about that.
30 seconds here. I only talk more when you guys ask me questions, so I can be brief. Yeah, you know, I'll tell you what, in the last month, the progression, both the volume and progression of quality detail on the charts that everybody is putting in here. I don't know if everybody else feels the same way, but like literally just in the last few, it's taken another level. So good job to everybody. I love reading everything and learning from everybody. And I am learning from everybody as well. I even learned from Donkey, believe it or not. He just needs to stop putting so much stuff on one chart. But I'm teasing you, Donkey. On this slide, I don't have anything more to say. Bruce, you kind of tied it all in. I just want to make one point. I trade a lot of different setups. 80%, 90% are in the continuation of the trend, kind of a first pullback, first touch type view. So that's why a lot of the slides look like I'm catching a falling knife. But for me, I have my system of a pullback. And then I also have several trade setups that are specific reversal longs. But when I take the reversal longs, just so everybody understands, I will list out all the confluence that you can see down there that gives me a lot of confidence in taking that trade. because I firmly believe you don't want to use this as a tool to catch a falling knife. Now, there's a lot of different scenarios, right? There's a reversal, there's a pullback into continuation of the trend. It can be a sideways market where it's just ping ponging, back and forth off of, a channel on the top and a line on the bottom. Create that channel. In that case, you could just, go VPI spike to VPI spike. So a lot of different ways to trade the market pulse VPI CVD combination. This just happens to be one that is a reversal, but there was a ton of confluence. And if you guys can start learning to have the confluence go along with the other stuff that you're seeing in Bookmap, right? Bookmap is amazing, but when you add some confluence to it, it enhances precise trade entries. And that's why I feel like I'm able to leg in small at the lower level where maybe other people wouldn't want to do it because they don't want to risk that. But if I see a Fibbo, if I see the S2 pivot, if I see a couple of my other structural lines that are buy indications for me, I will take those trades. But and then legging out, yes, I use liquidity always for legging out that liquidity that I see on Bookmap. And I try to use Bookmap liquidity in addition with other markers, whether it's SWAT VPOC on the screen or whether it's other structural targets that I have that go with my, because I'm trying to catch 50, 75 point moves. That's like my goal. So I have structural targets that I'm using to catch those. And sometimes what I'll do, Bruce, like what you said, I'll leg out at that first impulse move up. I will a lot of times cash in, raise my stop up to where that leg in, leg out on the W breakout is. I wait for that pullback again. I will add at that pullback and I put my stop underneath the leg in. And then that way I take some profit at that first impulse move up. I pad my piggy bank. I wait for the first pullback again after that because we're doing the setup that you guys have all talked about here for the last 10 minutes. And then I'll add back in and continue to ride it up to my other structural points or other liquidity zones. So enough said.
Excellent, excellent. Yeah, this is something I just wanted to make one more comment on that I really like in here is the trade management. You're marrying a few different things in here that I think is they're really good matches. One is the trading strategy with the right market, and then also with the right trade management. And you really got something here. So because this is not going to be the same on the ES. There's a reason you're trading the NQ. In fact, you're using the ES more as a correlation.
That's right.
And it's great because the trade management is such an important part. I mean, first we need to know we have an edge, but that trade management is really what's going to be able to define your risk and risk reward and really stretch it out in the reward side and reduce the risk as well. And we're going to do more and more of that. I keep saying that, but we are. And you're already doing it. It's great.
Thanks, everybody. Thanks, Bruce.
All right, thank you, Crash. Let's move on. So I don't think Dove is in here. Dove's kind of a long time Bookmap Academy member, and he's been making these screenshots for, like I said, for some years now. You guys have probably come across them several times, but they're so simple. But again, that goes right back into these stages, and you're really simplified what you're looking for, and you know exactly what you're trading. And Dove has that. In fact, he sees it, a price bouncing up here, and there's something in here that he's looking at. Actually, we'll show in the next slide just a little bit better. But entry in here, can't get through. He's got high liquidity in here. Very simple stuff. High liquidity up in here. You're seeing it not making it through here, selling short, and then looking for a move back down. Yeah, we'll go over this here. He's drawing a line basically. I think this line is actually a channel line, but anyway, here this one is the one I want to show. This is something that resonates with him. Yeah, this is that higher high for the day type of line here. He's looking at these big volume dots, and he's looking for pullbacks to these big volume dots in here. This is his thing, or one of his things, along with these other confluences in here. Right now, look, he's trading multiple markets here. So here's the NQ. Previously, we're looking at what was this? I think it was euro dollar or something. Yeah, it's the 6E, right? And this was an hour later. Was the Nasdaq, and then it's kind of similar strategy, a little bit different or different variation, looking for the pullbacks into that where the sellers came in, took control, looking for it to he's seeing the structure here starting to change, short here, taking it down. I mean, so simple, but he knows exactly what he's looking for, and I think it was worthy to go through this. And again, here's another one. And then this was another hour later or so. Now he's looking at the ES, identifying just these simple things. But look at this massive wall of liquidity down here. And then he sees sellers coming in. This is that bouncy ball effect that Daniel had mentioned. We'll go over that in just a few minutes. And then he's long here, right? Looking for the move back, kind of mean reversion type of thing. Just identifying these simple elements, but it looks easy, but it's not. The process is going through identifying a lot of elements, understanding how the markets work, focusing on the things then that work for you, and then now you've got your trading plan and you're looking only for specific things. All right, so let's move on. Caesar and Tesla. So yeah, great documentation here. You're doing a great job. I like that you have your higher time frame candles in here as well in the overlay. You know what you're looking for in your higher time frame. I believe it's pivots, right? I can't remember if it's you or someone else. And then we can open the mic. I don't know if you're in here, Caesar. There's a few nice things in here. So you know what you're looking for in your order flow. So you're also marrying these two things together. So you've got your see here. Yeah, you got your pivots. You got your R4 up here. You're hitting into that. Now you're looking at Bookmap. Okay, what do you have? A beautiful example of exhaustion in here. Tesla. Look at even the way that this is approaching up here. Here you got your high liquidity. Here you got your lack of buying, exhaustion on the buy side, selling coming in, higher liquidity at lower levels, stair stepping down, and then you're looking for the move back down into. Well, you also have your R3 or that you're looking for taking your profit. This is something else in here that was really nice. On the next image, you're kind of have this dialogue again, higher time frame pivots, order flow to gain the insight, and really nicely going through these examples. But this dialogue you've got going with yourself, BB Trader, it could take a lesson here, I think, from Caesar, because here he's like saying, I didn't hold on to my target, again. And he's kind of being hard on himself. But what I really like here is, the reason actually for his trades and why he got out, etc. I think he did the right thing. So I think you're being too hard on yourself. Absolutely, you did the right thing. This was a beautiful exit down here, but it did hit your target. But look at this big pullback here. Do you want to sit through that? I mean, you can even look to re-enter in some of these other areas. Anyway, this dialogue and kind of self-reflection, do this in your journaling. I think it's serving you really well. So Caesar, do you have any comments?
Thanks, Bruce. I'd like to shout out. Yeah, I'd like to shout out Rob. We're both members of not holding where we want to hold. Um, but yeah, I'm still balancing with my exits where like reading the short-term price action in Bookmap versus what's, where my target is. There's a whole thing of accepting my risk. I know where my risk is. I got a great entry there. I probably had a 10-cent risk. So sorry,
On Microsoft, is that right?
yeah,
Okay.
yeah. Because you can see how well the level worked, right? If you look at the candle chart, we tested it twice and then came down after my initial entry. So had I just accepted my risks there, I think I should have held or scaled out, not gotten out all the way. But regardless, I mean, I think in the long run, for every time I take the profits here, like was mentioned in the chat earlier by Shark and other people, it'll serve me well in the long run. It just is scaling out. But yeah, I mean, having everyone else's, like Crash said, the level of content that's posted here, how much I've learned from everyone. Bookmap, it's so intimidating at first, but with the help of everyone here, the academy, it's been great to really hit the ground running and feel that quick improvement as you start breaking everything down and you see everyone else how simple they can truly make it.
Yeah, fantastic. Yeah, you're definitely in stage 2 here. Kind of knocking on the door in stage 3. So keep up the good work. I think some of these things need some, you're being hard on yourself, holding for a technical level when the auction and the behavior might be telling you something different. I mean, this is a steep pullback and there's a lot of buy volume on this. I think this is a great area to exit, personally. And you took a nice chunk out. Then this went back up against you, and ultimately you hit your target. But like a technical, who cares? I mean, a technical level, it's about the behavior here. Um, you know. Um, anyway, just a point on that. That's all.
Thanks, Bruce. Yeah, I use the technical levels for my where. Where am I interested in looking at the book? Where am I interested in seeing what's going on in the price action, right? And Bookmap to tell me when. Okay, now is when you get in because it's, doing what I expect it to do at the technical level. So the exits, I'm doing the same thing, but being more focused on the book versus my technical level.
Yeah, well said. Yeah, thank you. Let's move on.
Thank you, Bruce.
If there's anything else, Caesar, else we'll move on with Daniel.
No, that's all. Thanks very much, Bruce.
Okay, thank you. Daniel, you're new in here, also just knocking out of the park here. Really great stuff. I don't know if you're in here. If you, um,
Doesn't look like he is, unfortunately.
okay. All right. So yeah, so I replied. So we're trying to do this now. If you guys reply in the Bookmap Academy room, we'll reply right in there to your stuff. I don't want to disrupt other people's rooms, etc. Oh, you can disrupt my room, but that's fine. But like other people's rooms, I don't want to give feedback for your Bookmap Academy stuff unless it's in the Academy room. You guys can just double post it. That's fine. So if you post in someone else's room and then you want to come over and post it in Bookmap Academy room, that's fine. We'll give the feedback there. So anyway, there's a lot of stuff going on in here. Again, higher time frame as well. Really nice. So let's jump in. So what he had noticed on the higher time frame volume profile, okay, and coming up, and you can see it on this one down here. Your value area high, value area low, coming right up to it here. So you got your profile reasoning for something to happen up in these levels, and it already had responded once, and then here's the retest back up to respond again. So now starting to like zoom in and start to look at Bookmap, and this was great. All right, so what do we got here? We have high liquidity. Okay, high liquidity on the offer here, and it trades. Okay, now it trades through it, so not by much, but we even have higher liquidity, and look how they're bidding or offering down here as well. Now the market's still hanging out up here, and there is someone on the bid and stair stepping up in these areas here as well. However, so this made me kind of, I actually saw this trade as well. I was demoing it to a potential partner, and we were covering it. But this structure in here is still bullish, and that made me kind of queasy or uneasy. Regardless, you had your higher time frame, you've got your high liquidity, you got higher liquidity, lower levels in here. Then you noted also less buying in here, and then the sellers come in and move it pretty quickly away. The one thing that you've also got your market pulse pinging to the buy side up in here, yet failing to go higher. Okay, so you even have maybe some potential divergence in there on the market pulse. This is something Crash looks at as well. And then what you have is the this one was my favorite part, was the correlation with NASDAQ. And look how weak it is in here. Here's your high here, it's lower in here, and it's even lower here. Not only these 2 points, but you even have another one over here. So that kind of makes, and this was my kind of personal opinion, when I was looking at this, it was like, yeah, I hope this works. Like, because I also saw a stop run in here, which you don't have stops and icebergs, but it was a stop run as well, market pulse. There was a lot of things in here, and it's like it should drop, or we should get some sort of move back into the range. But it was still just kind of chopping up here. But you really identified it nicely here with your correlation. It was weak, and then the ES followed suit. So great job on that. Really like that correlated market in there. So I don't know if you're still in here. And then another one that Daniel had posted here was this kind of just, I love this too, talking about the community again. Throwing this in there. Have you guys ever noticed that this bouncy ball into liquidity here? So kind of bounces, you get a higher bounce, you get another bounce, it's a little lower bounce, another bounce, it's a little lower, etc. Absolutely. You see it all the time, and is hitting this liquidity, just not finding enough buyers, hitting it again, not finding enough. I mean, look at the exhaustion in some of these areas in here. So this is really, it's very telling. In here. Yeah, I mean, some buying, but not really much. And look at the structure. I mean, they can't get even back up. They're not even retesting this. And that's Dove's thing, was that, that big sell dot up here. And they can't even get back up in there. You got high liquidity up in here. On the offer, it's at a lower area, pushes it right into it. Beautiful stuff. So yeah, you'll see this many times over, and or some sort of variation of it. Sometimes like we see it during the cash or during the webinars. You might get this big move, it kind of, or just even shy of it, and then you get some sort of reversal pattern here around 10:30 or 11 or so. And then it comes down, not only trades into it, it trades through it. Yeah, different variations of this stuff, but yeah, this happens frequently. So nice. I just like the kind of feel and approach of just calling it this bouncy ball, and have you guys noticed this pattern? Great place to share it, and better understanding of the how the markets function and operate. So good stuff on that. All right, guys. Well, let's see now. There's I'm finished, and Stan also went through some images in here and gave some feedback to Rob, Vinny V, and AJ, and user account 001 here. There's some really great stuff in here, guys. Like I was looking through it earlier. Stan went last time. And God, I really want to go through it, but we're already over an hour. So what I think we'll do is I'm just going to post this. Stan, is it okay with you if I just post this into the chat? If you're okay with that, because it's really great and really great feedback and coaching here, and very worthy of going through this, guys. So I would just say go ahead and take a look. Let me I'm going to post all of them in here so that you guys can access it, right? And here's slowdowns as well. Okay, there you go. And that's it for today. So we kept it around an hour, and I don't know what else to say, guys. Really great work for all the various points that we had mentioned. Yeah, keep it up. DNT matter. Congrats to the Bookmap Academy. Anyone out there who's mildly interested in this, you can go to the bookmap.com Academy page in here, and you can sign up and request a spreadsheet, etc. And you're good to go. All right, that's it. Thank you, everybody, and have a good rest of your evening. We'll meet up tomorrow for the All Markets webinar at 10 Eastern, and we'll mention this and go through some other stuff as well, and take it from there. All right. So yeah, thanks everybody, and we will catch you tomorrow.